Not every mitigation block is tradable. This is how you found the right one. Most traders lose money because they trade every mitigation block they see. The right mitigation block is not random. It forms after displacement in the direction of the higher time frame bias. If you ignore context, the mitigation fails. Trade the right one, not all of them. Structure first, then entry second. Let's go into the chart to look at how mitigation block is being traded. Okay, so this is the chart here, and one thing you need to understand that we have, when it comes to the range of the market, we have the continuous and we have the reversal. So mitigation block can be traded as the continuous and also be traded as a reversals. But most time, the best mitigation block is being traded as a continuous trend. For example, this is an example of how mitigation block look like. You know, the instant is that market should break the structure, then break this high, then retrace, then trade up. But the moment whereby we have a low being created like this, our market break this structure, this particular high here is a mitigation block. That particular mitigation block. For example, now let me do a reversal one. If we have market has been trading all high, the moment market was unable to break this high, at this particular the market was unable to break this high, then create something like this and break this low. So this particular level here is a mitigation block where we can expect market retracement into it and sell. So mitigation block are called buyers or seller removes. For example, when we are selling, mitigation block is buyers removes, because at this particular level here, the buyers thought that market is going to continue buying, but the moment market break these structures here, at least let them out. That is buyers removes. And when it is sellers removes. So that is how mitigation block look like. So let's go into the chart and look at this. I took a trade on USD Japan using mitigation block. So that is the particular trade I want to show you, and this is the trade here. So this particular trade you can see, I wrote here mitigation block, so that is what I use to take. Let me explain. This is the chart here. So on my chart here, you can see that we have bullish. Actually, don't forget, mitigation block needs to follow the order of the higher time frame, right? So which means you must have a bias on the higher time frame. You must have a draw on liquidities and directions on higher time frames. But we have break of structures. We have the break of structures, and you can see this uptrend based on the highs has been taken out. And the moment market break this high, now you can see before market breaks it, there is a continuous mitigation block being created here, because market was on it when market come to this space, we have a high, then it sells, was unable to take out this low, then continue the buy. So at this particular point here, we have buyers removes here, then we can actually expect them to come back here and continue the buy. And most time, a lot of people always be like, oh, how am I going to see it very clearly? You can turn your chart to a line chart, then using a line chart you can actually see it very clearly. This is a mitigation block here, but you have to train your eyes to see them with the blocks. So that is how the mitigation block is being traded. Thank you. Don't forget to like, share and subscribe, and for more video, thank you.